Fund managers say the current patchy recovery in the world economy can be attributed to the 2008 global financial crisis. They said the recent volatility in stock markets is also due to the decision by the International Monetary Fund, or IMF, to revise downwards the global growth rate from 3.7% to 3.3%. Speaking at the Edge Economy and Investment Outlook Forum, the Chief Investment Officer of Manulife Asset Management Services Berhad, Jason Chong, said the world is undergoing what he called an unsynchronized recovery.
If we start from 6 o'clock, okay, this is where we are at the recovery phase of an economic cycle. And then we move to boom, and then we move to a slowdown, and then a recession. So you can see that most countries are at the recovery stage, at different stages of the recovery. Right? So the world today is having what we call an unsynchronized recovery. That means not everyone is moving up, it's not recovering at the same time. Some are going faster, some are going slower. But generally, the clock is moving from 6 o'clock and eventually it will go to 12 o'clock. Okay? And US is basically leading the way for the recovery.
Chong noted that unlike the years prior to the global financial crisis, when global economy is correlated with stocks market, the market nowadays does not respond in such a way. But despite the volatility, Manulife expects US equities to still provide modest returns. He added that although the Eurozone economy is recovering slowly, the political will to bounce back is there. Back locally, Chong said he expected the FBM KLCI to go up by 6 to 8%, underpinned by about the same figure of growth in estimated corporate earnings by the consensus next year.
Although our Asian growth is plateauing, in terms of absolute number, we are still stronger than them. We are still looking at 5-6% growth. Developed markets are only looking at 1-2% growth. Yeah, it's an uptrend, but it's a slower growth. So if you want to make returns, if as a fund manager, a developed market fund manager, and I want to make returns, there's a higher chance that I make more money in this part of the world compared to the US. So in the short term, yes, there may be a bit more, I don't know, but in the longer term, we think that full funds will actually come back to this part of the world.
Chong said Asia has been relatively stable and will be able to leverage on the global economy in terms of exports and will be able to pick up quickly. Jacqueline Peng, DHTV.